Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of New York and London coffee markets. Hello and welcome. Now, before we start, I just wanted to let you know that no AI, that is artificial intelligence, was ever used in the composition, production or recognition of any of the patterns, levels, analysis or any related items on these, my charts. This was all my own original work, as I think you deserve to have that. So with that, New York coffee. You can easily see from the recent action that yet again, the high at 429.5 from February this year has capped the rise in September, and I would also say October, as it did back in early March and late April. So what can we now expect from this market? Well, the lows 5 weeks ago ended up being just ahead of the key 50% Fibonacci line for the important November 24 to February 25 move at 335.15. And back then it had pierced, but the unbroken assistance of the medium moving average, currently 340.60, as well as the rising green short medium moving average, currently today at 472.60. Today we are over both, though in the case of the green short medium moving average, barely over it, as last week was spent for a large amount of time piercing it. We seem to have built a small base since late September on the very slowly rising gold long moving average, currently at 358.10, after pushing up through it 6 weeks ago, when it was back then acting as a cap. 2 weeks ago we explored higher, but the market was capped, a feature I will describe shortly, and ended up last week back down just ahead, but not willing to test the slowly rising gold long moving average. All this action high has left us with a number of interesting situations. Thus, I drew 4 weeks ago the beginnings of an August to late September bullish Andrews pitchfork. However, the market pierced the lower time for this pattern, and I have downgraded it. I've not downgraded. I have finessed it into a bright green bullish shift pitchfork for the same move. It's a shallower pitchfork, and this is where the capping action came in, as 2 weeks ago the bright green middle time, which is currently at 429, acted as a successful cap on the bullish action, such that last week prices pushed down and below the bright green lower time, which is currently at 380.10, though they did not ever really let go of it. It was trailing along just underneath it, and today pushing up over it. Additionally, nearby is the green short medium moving average, currently at 372.60, which you can see eroded the dip on a closing basis, and of course a little lower the rising gold long moving average. I said last week, and I quote, I'd watch these three, the bright green lower time, green short medium moving average and the gold long moving average, for the next week or so, as the action there or not there will not only be interesting but also telling for the future, end of quote. This has proved to be true, but it has not stopped me looking on the downside, as I've also today drawn a mid-September to late October bearish Andrews pitchfork, with the market coming up to the upper time, which is currently at 393.90. Now, I am fully prepared to finesse this to a shallower bearish shift pitchfork for the same move, as I'm not too keen on the sharp bearish angle of this pitchfork. Finally, there is something else I'd like to look at here. For this, I am indebted to Ray Bradford for asking me about New York coffee 31 weeks ago. And I went at that time to my longer term charts, the monthly charts, where we can see some possible insights. You see, on the monthly longer term charts, I noticed back then a pattern that had not been immediately obvious to me at the start of 2025 when I earlier reviewed the longer term patterns. It is a multi-year 2012 to 2024 very large reverse head and shoulders bottom, a bright red neckline, which on my chart currently is at 276.65. The break higher over this neckline reached its primary target on the upside, but there was a secondary much harder to reach target up in the 43.35 area. What was interesting about this secondary target was that nearby to that higher level was the next 100% projected Fibonacci line here at 433 3/4. That's actually quite close in the scheme of things. Prices did indeed turn lower, up at this key combination of the 100% projected Fibonacci line and the target at 433.35, dropping down and through and closing below the important 50% projected Fibonacci line at 347.20 and below the high of May 2011 at 308.90. However, in July and again in August, the market started to form a base on top of the bright red neckline. August, with its monthly key reversal up, raced all the way upwards, and we saw an extension to that move up in early September, but not reaching quite as high as we saw back in February, before dropping down lower and setting up September as a monthly bearish harami. However, since then we have not carried on lower, at least not in October, as there we ended up with a combined bullish piercing line pattern and bullish double for the month after September's bearish harami. The top side had resistance between 371 and a quarter to 375 and 3/4 since engulfed, but that was where we ended up in October. We possibly have further resistance up at the old broken upper time, which is currently at 394.55 of the former 2019 to 2023 bullish Andrews Fitchhawk. I personally don't favour this resistance much, though we have stopped there in August on a closing basis. I've also drawn a new, quite steep, especially for a bullish shift pitch hawk. It's for the action for the October 23 to August 25 action. Here, we are quite close to the middle time, which is currently at 389.05. I don't favour this one much, but it is nevertheless still there. Meanwhile, on the downside, the real key, will be the bright red neckline below. However, the old 50% projected Fibonacci line at 347.20 looks interesting. I should point out one more final feature on this longer term chart, the possibility that we may form a very large bullish halfway hesitation or a possible double top. All the contrary implications both those patterns may have. I will not discuss this last point any further, as it is way too early to isolate which will be which. In all this, I ask you, please remember that these are on this monthly chart, longer term, in some cases, very long term patterns. London coffee. 26 weeks ago, I said of the bearish pressure on this market, and I quote, "They now have the overhang of the market from roughly 5,300 up to this year's high at 58.49 sitting above." End of quote. This overhang of bearish pressure and ammunition is important, as it started back then to press lower, heightening the breaks lower. The rise since early August pushed up through some significant resistances, now turned into supports, and more so, these are some keen at the time and relative close to the market supports. Notably, the trio of interesting 50% Fibonacci lines for the November 21 to February 25 move at 38.08, the May 21 to February 25 move at 36.49, and the March 20 to February 25 move at 34.81. Then there's the congestion of the 61.8% Fibonacci lines at 41.68, 41.87, and 42.90, and the interesting 50% Fibonacci line for February to July 2025, quite close to the market at 45.05. All these are now back to being supports, as is the flatlining pierced but still valuable mauve medium moving average, currently at 40.49. However, looking higher, we have now some former supports that are now once again resistances, notably the gradually dipping gold long moving average, currently at 46.37, which eroded a lot of the bullish incentive back in September and late August, as well as 2 weeks ago and late last week, though prices are now once again penetrating it higher today. Now, in recent weeks, I suspect that the most important of all the resistances was, and I suppose still is, the capping dark blue February to date downtrend, which is currently at 46.82, which caused a lower second high in mid-September when compared to the late August high, and an even lower high, though not by much, 2 weeks ago, and is being tested today. Finally, after all the erosion we saw from the gold long moving average and the dark blue downtrend, we have what I thought might be interesting, but which proved 2 weeks ago to be crucial, and that was that the lesser Fibonacci line of 48.22. This capped the rise 2 weeks ago, as it did back in September, and I suppose also in August. These first two resistances started to form a double top, but then gave up in favour of another action. And it might just be that the bright green lower time, the aid of the green short medium moving average below it, may be the causing it. All this is important as a cusp to the market is coming at the end of this week, as the dark blue downtrend slips below the green lower time, and I suspect we may see volatility just ahead of it. And at that time, also, additionally, the 50% Fibonacci line at 45.05 and the declining gold long moving average and even the dark blue downtrend may likely come together in the middle of December, so I'm looking at some potentially exciting times ahead. Just remember this, it may be easier to sometimes wait and break a pair of close together supports or resistances than to try and take them on each individually. Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.